So what in the world happened with Nvidia today? What's going on, guys? It's Ricky with TechBot Solutions, and I wanted to summarize a little bit of the earnings call, a little bit of the earnings report, and what I'm understanding from this market sentiment. So some of you guys might be confused. How does this make any sense? Nvidia beat expectation, and it beat it by a decent amount. Nothing crazy, but it beat it, right? Why would the stock drop? I want to answer that question in this video. And I really hope that, again, if you learned something new, maybe you can consider dropping a thumbs up on this video and subscribing if you feel like I earned it. Let's go ahead and jump right into it. So what happened today? For those that do not know, Nvidia reported earnings as it reports every single quarter. It's one of the last large companies that reports earnings. It at one point was at highs of 183.40 and then hit lows of 171.86. It found its support right around 175, 176, currently trading at the extended or overnight hours right around 176, being down 3% from reporting earnings. It's not that significant of a move. If you pay attention to the actual previous or previous earning reports, this is what was released today. Market expectation was $1.01. We came in at $1.04. It beat it, especially in comparison to last EPS. Today we came in at 46.7 billion. Expectation was 46.1 billion. Again, we also beat it. The revenue surprise. This is one thing that I kept expressing and highlighting. I just wanted you to see it. I wanted you to see the numbers for those that cared. The surprise that we've been seeing recently has been barely single-digit surprises. Now, I am no one to be judging or criticizing Nvidia is only making $49.7 billion a quarter. Now, I don't mean it like that. I mean it as in it looks like it's slowing down in the trajectory in its previous pace of how it was growing versus now. That's all I'm expressing. And that's all I want you to take it as. Before, from what was expected to what was reported, we would see surprises 18, 30, 19, double-digit surprises, revenue surprise, 21% beat expectation, 10% beat expectation, 11.99% expectation, right? And then that's when the markets would have like 14% gap ups, 23% gap ups, 13% gap ups. Recently, at least for the past few quarters, don't get it twisted, but a 7% surprise, 3% surprise, an 18% miss, a 1% surprise, a nearly 3% surprise, and about a 1.3% surprise. So again, I am, pun intended, not surprised that the market didn't like it. Remember, when a company, so let me answer this question. When a company is trading at an aggressive multiple of what the company is currently valued at. This is one thing that you'll see a lot of people refer back to, PE ratio. It's at 57.8 times its earnings, which is kind of rare for a company of this type of market cap to have one that is this high. I'm not comparing it to your PLTR or any of those overhyped up companies that trade at 100x their earnings. A lot of these Magnificent Seven stocks, excluding Tesla, trade at a much lower PE ratio. This one trades at 57.8, meaning that you're paying a premium to own this stock. It is trading far beyond of what the company is actually producing right now. So because it's trading at such a premium at the highest level, meaning that, again, it's a company that traded at a $4.43 trillion market cap. Its gap between second place, because Nvidia is number one, largest market cap in the world, the second place is nearly $1 trillion less than Nvidia. That's the biggest gap in history from number one stock to number two stock ever. The swing that we saw today, although it was not so significant, was a $130 billion swing. So tomorrow, if it were to open at this price level, it would have lost $130 billion in market cap valuation. That is how big Nvidia is. But the point that I'm trying to make is, well, Ricky, why did it drop? It beat expectation, so why did it drop? Because of investors. Nvidia is doing its part in leading the AI revolution. I truly do believe that. And again, you guys know that I have every reason to want to talk bad about the market or the stock so it can drop. Like, there's no reason to. Nvidia is a very strong company, right? If we look at the expectations, $46.7 billion in revenue, 56% increase year over year. Net income, $26.4 billion, 59% year over year. Gross margins, insane, 72% gross margins year over year, 20% quarter over quarter. $60 billion in buybacks. That's something that we'll talk about in a little bit. And then $54 billion in revenue guidance, which also beat market's expectation. And when we move on to the next tab, you can see its growth has definitely been accelerating. My biggest thing that I want to highlight. So its guidance was good for Q3. Its earnings were good for Q3. I think the surprise was just not what Wall Street expected, not what Wall Street wanted for a company that's trading at such a premium. They wanted more out of it. That's not Nvidia's fault. That's Wall Street's fault. That's investors' fault because they are projecting their own expectations on a company that is already doing so well. But this is why we talk about the PE ratio, because it trades at a premium. Investors inflate the price so much that Nvidia is not currently trading, like before it reported earnings, it was trading at a price already of $181 per share, right? Because that's what it closed at. If you think about that, that's a $4.4 trillion market cap. It's trading already of what investors project this company to do years from now. If you actually pay attention to the numbers, Nvidia produces, and don't get me wrong, it's a lot of money, $148 billion in annual revenue. That's a ton. It prints money and it has healthy margins. But guess what? There's a big gap between $148 billion to $4.4 trillion in value. It is simply trading at an extreme elevated level. And because investors, prior to this earning report, have been inflating the price so much because of their own expectation, Nvidia did their part. They delivered. It was investors' expectations that were too high, and then that's where the stock corrects itself. Now, don't get me wrong. I think that the market by tomorrow can buy up Nvidia from 176 back up to 181. Nvidia and the market are simply just that irrational and that bullish right now. But then that brings us full circle. That is why then we see such strong retracements when nothing is going wrong, maybe in the future. Let's say when the Federal Reserve begins to cut rates in September, maybe all of a sudden markets begin to sell off. But why? Well, again, markets got ahead of themselves, right? And then things can potentially begin to present themselves, risk begin to present themselves, slowdowns begin to happen. It's not like they're currently impacting the market now, but those weren't factored in. So once they are factored in, then the price has to get adjusted because now it's not what it was. It's now a little bit lower, which then means that these corrections happen. So in my opinion, it's not that Nvidia didn't report good earnings. They did. They simply didn't wow Wall Street. And I think that's the best way to put it. For me, the biggest thing that I wanted to highlight was the surprise. The surprises of what Wall Street expected versus what they're actually reporting are becoming slimmer and slimmer. If you pay attention to this growth that they had, it makes sense on why this company has gained so much traction because of where it was in 2020 to where it is now. Its growth has been insane, but recently the gap between the past year to what it was 4 years ago is now very different, right? Past 4 years, it was growing at a very rapid pace. It just looks like it's not that it's peaking, it's just not accelerating to the same degree. But remember, that's Wall Street's expectation that it's putting upon Nvidia that is not allowing the stock price to continue to grow because, again, it's a lot of projected value that is currently being factored in, as most of the market is, right? Nvidia data center revenue has grown 10% in the past 2 years. This shows how much Nvidia's data revenue has grown. But if you listen to their earnings call, The one thing that they highlighted was, based off of recent quarter after quarter, it's not as spectacular as what it was, again, 2 years ago. If you look at the past 2 years, its growth has been insane. The jump ups from 4 to 10 to 14 are quite significant. From 3.9 to 4.1% wise, not as impressive. Still, an insane amount, because data center revenue, if I'm not mistaken, is a majority of NVIDIA's business. And we'll talk about that in just a little bit. We can pull it up right here. We can see the data center revenue is a majority of NVIDIA's business, gaming, and then other. This is where we are as of right now. And this is, again, what we were. You can see from what it was back in 2023 or 2021 to where we are now. It's insane if you look back 4 years ago. But if you look at recent growth, it's still incredibly impressive quarter after quarter, just not to the same rate, not to the same degree. So is a slowdown happening? Well, just like anything, everything eventually is going to peak, right? Especially when obstacles or challenges begin to present themselves. And I think this is where the slowdown could possibly begin to present itself, where NVIDIA has looked invincible, and it still does until now, right? Where maybe we might actually see a quarter where some obstacles or challenges might actually present itself. This is the part that was kind of odd. NVIDIA in their earnings call says that one customer represented 23% of its total $46.7 billion in revenue from the quarter. Someone spent $10.75 billion with NVIDIA during that quarter. To me, I don't like that. You let me know down in the comment section. That is, one customer represents that massive amount, 23% of its overall revenue. Well, what happens if that customer begins to slow down? Yeah, hopefully they ramp up, but what if they don't? Again, to me, this is kind of not screaming AI bubble, but I've said it many times. I'm invested in NVIDIA long term. I got it at a pretty cheap price per share, sub 100. I have no intention of paying a premium and buying NVIDIA at $180 per share long term. I simply cannot justify it because I don't want to call it a bubble, but it's just too much of a premium that I'm not able to justify. And that's just my own personal decision. If you're okay with that, be my guest, right? But I wanted to share that with you because I thought that was a very interesting stat not enough people are talking about. One customer representing 23% of its total revenue. What if it slows down? What if that customer looks for an alternative? AMD is stepping up their game. Intel is now partnered with the US. What if the United States begins to put more restrictions on these companies? And then again, we begin to see a slowdown, something that NVIDIA hasn't actually processed recently. And then it's the actual income statement of the overall, revenue it coming in to the actual net profit. The part that supposedly that I keep reading about is that the data center revenue was not as much of a surprise as Wall Street expected. Again, that's Wall Street's own fault. I really put no blame on NVIDIA. It's not like you have Jensen pulling a Michael Saylor telling everyone, you need to invest in NVIDIA. You need to invest in NVIDIA. Just like Michael Saylor tells you need to sell your house or take a second mortgage on your property to buy Bitcoin or to buy MSTR, right? It's NVIDIA's price and valuation and investors have been earned based off of its performance. It's just that attractive, right? And what it's leading. Now, again, that doesn't mean that it can't be overvalued. It just means that they're doing their part and not just talking the talk, but walking the walk respectfully. While others, again, just try to ride off of the hype of NVIDIA. Just my 2 cents. And I thought this meme was actually quite funny. It just shows kind of like the idea of the Mag 7 or, really large companies and how NVIDIA is just, one tug away from rug pulling the entire market. So I thought that was quite interesting. The other thing that I wanted to highlight that, again, none of my pictures did, is China revenue. A lot of these expectations and forecasts and guidance for the rest of 2025 and even 2026 don't include China, to my understanding and what I keep reading. And people keep emphasizing that if China does get factored in, then it would have been more of a surprise. So that could be a curveball that can reignite the excitement and potential surprise aspect of it for NVIDIA in future quarters if there is no government interjection where they restrict Nvidia from being able to sell their H2O chips or any of their Blackwell chips over to China. So we'll see how that continues to develop. But also, again, these restrictions can really hold Nvidia back. But if then they do allow Nvidia to partake in that marketplace, who knows? Maybe they can begin to tap into that market and it can lead to much larger growth in revenue because that hasn't been factored in yet. Something to take into consideration. So again, just wanted to do my part in keeping you guys up to date, sharing my thoughts and opinions on Nvidia as it reported earnings. Long term, I think Nvidia is obviously leading the AI revolution. Do I think it's a super cheap stock to buy right now in the short term? No. Do I think overall markets are overbought? Yes. Do I think that they have to pull back right now? No. Why? Because the Federal Reserve is expected to cut rates and we're waiting to see how the markets react. Because if you've paid attention to it, markets are still kind of just trading sideways, right? They're indecisive if they want to continue to make new all-time highs or if they begin to de-risk because it's a buy the rumor, sell the news type of approach leading up to September 17th, which is when the Federal Reserve is expected to cut rates. According to the Fed Rate Monitor tool, there's about an 84.5% probability that the Federal Reserve is going to cut interest rates as soon as September. And again, the market could thrive off of lower rates because when it's cheaper to borrow money, again, people are more likely to borrow more money, therefore boosting our economy. So I'll do my part in continuing to keep you guys up to date. I appreciate your guys' time. Do not forget to subscribe and drop a thumbs up if you feel like I earned it. I will be live streaming if you're part of my LPP team. Tomorrow, there's a series of economic reports that are going to be released 1 hour before the market opens. So at market open, I will be talking about those series of the initial claims and continuing claims report that are set to be released with all the others. If you want to tune on into my live trading session tomorrow, second link in the description down below. There's a discount link there for you. And like always, let's make sure that we end the year on a green note. Take care, team.